Hannah Bronfman, creator, investor, and activist, and moderator Liane Jackson, senior law editor, Forbes.
So where am I going? Over here?
Yes.
Okay.
Good.
I was like trying to take a photo. I was like, oh, look at this. Look at this.
Welcome, ladies, and thank you all for joining us for this really interesting panel discussion for anyone who has a business, who's going into business, who's looking for funding. The question about venture capital. When do you need it? When should you seek it? And how do you go about getting it? I have joining me some really illustrious panelists today. We have Melissa Bradley, who's the GP of the BEA Venture Fund. She's also the visionary behind 1863 and New Majority Ventures. And thank you, Melissa. I'm going to have you guys talk a little bit more about what your businesses are in a moment. We also have Hannah Bronfman. She's activist, author, influencer, investor. She's been a talent. She's on-air personality. We have some multi-hyphenates here who are going to provide a wealth of information for anyone looking into how venture capital works. Just tell me a little bit briefly about the funds that you guys are running, because you've received funds, you've been businesswomen, you've had a lot of different career paths, but tell me a little bit about the funds that you're now running.
So at Contour Capital, we're really focused at the intersection of consumer wellness and digital health. We are investing in founders who are trying to solve big problems and have cultural relevancy and that are highly scalable. And we focus really kind of on the Series A level, so companies that are doing between 5 and 20 million in revenue. And yeah, that's what we're up to.
And at BEA Venture Fund, our vision is to close the wealth gap. And so we invest in businesses in the sectors of financial inclusion, health and wellness, systems change, and sustainable communities.
Okay, great. And I do want to talk a little bit more about that, the social impact investing, which I think a lot of funds that are minority or women-owned are looking at sort of the broader way that they can impact the communities and help society. But first, you mentioned how you're looking for companies that have 5 million or more, I believe you said. So not everyone, of course, is at that level of revenue. Who should be seeking venture capital, and what type of business are venture capitalists looking for in terms of their financials and their books?
I mean, we're looking for businesses that, I think venture capital in general is looking for businesses that are highly scalable, that are going to return, 7 to 10x or more. I think that generally venture capital wants to come in and be a strategic partner and wants to, help aggressively scale that growth. And I don't know, what Melissa, I'm sure you have.
Yeah, so I think, first of all, I think too many people want venture capital and should not have it. If anybody in this room knows me, if you want me on your ass, then you can come get venture capital. If you don't want me on your ass, asking you every quarter, what have you done and why have you not, then don't come talk to me. I'm just being honest, right? Venture capital is not patient capital. It is focused, as Hannah said, on scale. People can grow a business and people can scale a business, and they are two very different things. So if you think that you can have an outsized return and you can own significant market share and you are willing to work at a velocity that allows me my return within 3 to 5 years, I got you. If you want to build a business going to be $7 million a year, you can pay yourself, you good, that's probably a debt investment, or that's just self-financing. But I think all these TV shows think that venture capital is good for everybody. I think the 3 things to be mindful of is, 1, the speed. You can't be sitting around thinking, staring at your navel, should I do this or should I not? Because there is a level of risk tolerance that we're willing to take. I think the second thing is you have to be wanting to be a billion-dollar company. Because, A, you need that, because by the time we come in, we're going to take our share. And then B, that's the return we need to go back to our investors. And the third thing is you need to be coachable and want advice. We do not at BEA Venture Fund invest without a board seat. We want to be able to help bring you forward and grow your business. And I think that that's important. Too often people look at VCs like a bank. We are way more than a check. You were talking to serial founders. I've had 2 exits. I'm building another tech company. I actually am more valuable than the check because I understand how to get you where you want to be.
Yeah, to your point. Oh, go ahead, Hannah.
Oh, I mean, yes. I think also companies that are looking for just capital, again, it's like go to the bank, right? We're more than that. We're strategic partners. We're helping, we're helping operate. We're opening doors to distribution. We're giving you cultural fluency. We're giving you access. I mean, in my case, we're giving you access to influencer networks. We're helping you get deeper insights and alignment and authenticity with your audience, right? And I think also, you have to, as a founder, you really have to be aligned with the type of investor you're looking for, right? And you can't just go to an investor who doesn't even invest in your sector just trying to get money. Like, you need to do the proper research. You want to tailor your pitch to that investor. And again, if you are looking to have people on your ass and aggressively scale your business, then venture capital is definitely where you should be looking. Otherwise, there are so many other ways that you can grow your business and other platforms where you can receive financing that might better suit what you're looking to build and how you want to build it. Because, by the way, there are real returns in businesses that don't need to aggressively scale. I think we've put a lot of emphasis on this societal pinning of a little ribbon, oh, we got venture capital funding. It's like, you can have a very successful business that you do not need any venture money for, that you can build on your own, build with community, build slowly. There is real value in that. So don't get caught up in the world of venture just because it's what's constantly being put down your throat, and we've all lived the last 15 years of, the girl boss era.
And I would say, stop giving us a bad name. Because if I hear one more person say that VCs are racist and sexist, well, in some respect they are, but understand we need a return. If you come to me with an idea that is not scalable, I'm gonna tell you no matter what color I am. And so I do think, no disrespect, but there's a whole bunch of founders who are showing up not prepared for venture capital. And so you're gonna get a decline because our risk tolerance for somebody else's money is very low.
To your point, what do businesses need to show up with if they're looking for venture capital? What kind of businesses what can they do to make themselves attractive? What are you looking for in their bottom lines? How should they be showing up when they're seeking venture capital?
So one, know the damn business you want to build, and not via AI. If I see one more AI business plan, I'm gonna throw it away. You gotta know the sector you're building. Also, you got to know your customers, and it can't just be people like us. No disrespect, but B, who's a really good friend, was on here before. People gave her shit because she went to get a bigger audience, but that bigger audience meant bigger dollars. Mm-hmm. So you've got to have a sense of the community beyond just who looks like us, because let's be clear, we ain't all kinfolk. Hey, all skin folk and kinfolk, and we ain't always that loyal. And then I think the final thing is you got to know your numbers, right? I think that I'm investing in a long term. I'm looking for an exit within 3 to 5 years. If you have not done the numbers to see what your 5 to 7 year projections are, and you can't tell me what the exit strategy is, I don't really care what it is, but how am I to get my money back, then you're not ready. I think that's a conversation in development, but I need to be able to make decisions on what is presented in front of me and how ready you are, not having 5 and 6 conversations of you coming back and forth. So I think there's a level of confidence and courage. There's definitely financial acumen, and certainly a sense of what is your scale strategy and how many customers you can acquire to actually make this business viable.
And knowing the fund that they're approaching, because as you mentioned, you have specific niche that you're looking at. Talk a little bit about doing the research about who you're approaching, as well as having your books in order.
Yeah. Also, margins and the road to profitability. I think those are things that founders need to think more about, or in the early days of building, and really understanding, does this model work, and how are we going to tailor it back or pivot and change along the way in order to meet those metrics that we need to hit. I want to say that when you said being able to grow outside maybe your first more niche community, it is a double-edged sword. I've seen so much pushback from Black and brown communities when founders expand their product lines or expand to really include all diversity and make that, TAM larger. And the community pushes back on that because the company was originally built on something that felt authentically just for them. But at the same time, it's people were so mad at Monique when she sold Mael, and you're why can't we be happy for this founder who spent 11 years building that business?
That's right.
You know, and it was like, and I get it, because there's only so many places for Black and brown brands to go to continue to have their integrity. You know, when brands sell to a P&G, they get P&G'd, right? We get it, but there has to be there has to be these exits. There has to be more creative exits. For founders of color, so that way we can start to balance, I think, the feelings of the consumers along with the accolades of the founders who are building these businesses.
I just want to piggyback on that, and it's okay if y'all get mad at me, I don't care. But we also shoot ourselves in the foot. So I don't really give a shit what you feel about Target, but you jacked up some businesses that were in Target with this boycott. Businesses that were venture-backed, that were doing well, sure, for a greater good, but those businesses got jacked. And so I think, as far as I know, we have a relationship with Target. Then nothing changed. They just stopped saying the word. They ain't no different than JP Morgan, and we still patronizing them. So I do think that if we want to have this level of integrity and hang on to our businesses, we got to show the fuck up.
Agreed.
Just saying.
So can you talk
Just saying.
A lot of feelings about the Target boycott. We could do a whole session on that. But so if you could talk about a little bit the levels of VC funding, this different types of series, and what are other good financing options if someone isn't at the level where they can even approach VCs or have that kind of revenue coming out of their business at this point?
So let me start by saying what's not good. Please do not borrow against your home. Please do not pull out your 401k. There is no nobility in losing the time value of that money. We cannot honestly say that entrepreneurship is a pathway to wealth if we take away our own wealth that we have accrued by following a dream. I think it is important that you have savings. I think it's important you go to friends and family. I don't care how much it is, but just a demonstration that there's a community around you that cares. I think there's plenty of platforms where you can do crowdfunding, whether it's non-dilutive capital or dilutive capital. And I think that there's financial institutions. We have an amazing financial institution coming up next that I'm so excited about, one of the largest Black banks out there. But there are CDFIs, as Robert spoke about. I mean, there are institutions that will give you money as long as you show up correctly. But I think you have to understand that from a VC perspective, and Hannah can go into detail in the stages, but there are those stages where you're not making any money, and I'll start there, right? Pre-seed. And people say, well, it goes from a napkin to the piece of paper. It's got to be more than a napkin, right? I think it has to have some level of validation, because when I think of pre-seed, that just means you're not generating revenue, but you've at least done the work to understand that there is a market that is waiting for you. And then seed would say, yeah, you've done some work, you're making some revenue. It doesn't necessarily be a lot, but there's a proof point and a signal effect that somebody is willing to pay for this.
No, you said it. And then there's, then there's Series A, which I think is kind of like this weird middle ground where it's like this early growth capital. You've got product market fit. Maybe you're already in a retailer. You've already got some good distribution. You're generating revenue, but you're looking to take this to the next stage and try and get, maybe up to, I don't know, every business is different, whether you're a technology business or a consumer business. So I'm not going to throw out numbers because it's not really relevant. But then it goes on to Series B. Sometimes you have extensions on all of these areas, whether it's a pre-seed extension or a seed extension, and that's kind of like a bridge round, which kind of gives you a little bit of capital to get you to those next set of metrics that venture capitalists are looking at for, to take your valuation higher for that next round of capital. And then hopefully, you're having exits at around, Series C and beyond. Or, you're IPOing or what, there's multiple different ways of exiting. But yeah, those are kind of like the basic round terms.
And I think in terms of exit, obviously you can go IPO. I'm not gonna lie, that's pretty hard for us. I think you have seen a wave of acquisitions in certain spaces. There's also two other movements that are happening. There's a group called New Majority Capital, and they're doing entrepreneurship through acquisition. So if you come from a certain background, we have a lot of, unfortunately, federal workers who are unemployed. But if they're coming out and they're able to borrow some money, put together some loan, they can acquire an existing business and actually have some cash flow. And then a gentleman who I love and used to work for me, Philip Reeves, he has something called Apis and Heritage, which is going out and buying businesses that are run by white people, but have predominantly Black employee base and turning it into an ESOP. And so really focusing on community wealth. So I think, that is just a signal that there are lots of ways to think about, particularly in our community, to create wealth. I also would say there's joint ventures. I know Aurora's in the audience, so hopefully she's not offended, but I don't know that we need any more hair care products. I'm just saying. I don't know that we need any more soap. And so, I'm just saying.
I also invest in beauty, but it's okay.
But, I mean, it's not a bad thing, but I say that from a creative way. Like, if you are just starting, but there's somebody that has a similar idea, there's nothing wrong with doing it together.
Yeah.
Like, to me, entrepreneurship is a team sport. And so I do think whether it's, hair care or technology, too many of us are trying to take this road alone. And so I think one of the best ways is to figure out how to do something together.
Did everyone write down the 2 resources that Melissa just shared? Because are you sharing that on your Instagram? Because I haven't heard of either of those, and
I we're throwing out a lot of really.
And I just want to make sure that people know
I'll be
where
sure to post them. I don't do it. I will.
You need to
post
post
I'll
them.
post something on Instagram right
or
today.
LinkedIn or wherever you're posting.
I got you.
Just post it because
I'm
people
old
need
school.
to know.
It's Entrepreneurship Through Acquisition, or ETA. The Duke University and some others, they have a whole center on entrepreneurship through acquisition. And then A&H, APIS and Heritage, they're in DC, Phil Reeves, and that is businesses and then turning them into ESOPs.
This is also being recorded. You'll be able to go back to.
Oh, shit. Okay, now you're telling me.
So you'll be able to go through, because there's a lot of important information that, valuable tidbits being passed out right now that I hope that everyone can absorb. It's hard to get it all down. But, so there are more than 1,000 minority and women-owned private funds out there. A lot of them are probably more women-owned than, say, minority in terms of people, Black people. But what are you looking for in terms of return on like a social impact investing? Also, do you look at opportunities different, like the opportunities out there to invest, are you looking differently than you'd say like your male counterpart might be doing? Is there anything that you believe is different in the way you approach as a woman and as, of course, a minority fund?
Yeah, I mean, my POV is my edge, right? Like I'm focused on consumer wellness, digital health. A lot of the digital health platforms have an emphasis on women's health. Women's health is massively underfunded. Sure, there are some VCs out there who are looking in this space. A lot of them are run by women. Only 3%, less than 3% of venture funds are run by women. And I think it's less than 1% are being run by women of color. So I think our POV is really important, particularly in the space I'm talking about, because Black women are disproportionately affected by our healthcare systems, right? And so in order to create solutions that actually will impact the communities I'm trying to impact, we need alignment in those investors. And I don't really see that from people who don't look like me.
And there's a lot of money out there, the VCs. They're missing an opportunity. But it's good that we have.
Well, there's a lot of money, but it's not enough going to us.
They don't care. No, I mean, like, there's a lot of opportunity for them to return on investment if they were to do so, but they still don't feel.
Well, I want to say, I'll speak to male counterparts in particular. I mean, there's research. I am a professor as well at Georgetown. There's research that says that women are better investors than men. And it's because we have a very different risk profile. We tend to have a broader spectrum in terms of when we do comparative analysis. So I think that's a given. But I don't want to lose sight, particularly for anybody in this room. Anybody in this room thinking about raising money? Okay, so she said right here. Okay, I got you, sister. Oh, currently. That's a good drop. But I want to say that, when we talked about the racism and sexism, I think we do have to understand that right now, women of color in particular are not getting those dollars, right? The plethora of spray and pray from George Floyd's murder, that has declined. And I will say that while you are watching businesses feel the impact, so are we. I only invest in Black businesses, or try to. And so we are experiencing, I just want people to understand, we're experiencing the same backlash you are from our investors of like, well, can't you find somebody else? And the reality is that there is precedent for our businesses to have outsized returns compared to their white male counterparts, but research says that black businesses, it costs a black founder at least of $250,000 more to start the same exact business as their white peer.
No surprise there,
And
though.
but that
really
doesn't get caught
staggering.
into the equation. And so if you
That's staggering.
recalibrate valuations, we are indeed outpacing many white firms.
I mean, I've historically, as an angel investor, invested in women of color. I have a very diverse portfolio, but as I embark on my institutional firm, I've actually met with several potential LPs who have told me that I need to focus on a broader range of founders, otherwise it will be very hard for me to get capital. And showing up as someone who hasn't spun out of A16Z or Sequoia, I'm already at a very interesting dynamic, and so it's been really interesting navigating these waters as an outsider who isn't really an outsider, but I guess is. I don't know. It's like all of these hurdles and then more invisible hurdles. So this industry is probably the most opaque industry I've ever come across. And it's a wild ride out there.
It is. I know you're about to close us out, but I have one pet peeve, and it's not necessarily with you. But if we look, no, it's not. I want to be clear. But because how we show up is extremely important, and Robert spoke about that. I just want to be clear, the fastest growing segments of founders in this country are black people and black women in particular.
Yes.
The fastest growing demographic, where we already know in states, are black people. I am not the minority. I am the new majority, and that scares the shit out of people.
Yes.
But we have got to stop owning these labels that put us at a disadvantage. So I just wanted to say that.
Yeah.
I'm sorry.
And I was gonna ask for something inspirational and positive, because I think all of this is. I think you're letting everyone know that what the hurdles are, but as black people, I think we're good at hurdles, and that's what we historically. That's where we know how to jump, and whatever's presented in front of us, we're resilient and we will persevere. Any final thoughts, Hannah, on that note?
No, I think Melissa closed it out perfectly.
Thank you.
Thank you.
Both.
Thank you.
Thank you both. Thank you.
Wait, Melissa, hold on, come here.